is spinning a little faster when it comes to the stock market this week. You are probably not alone, and that's why we are trying to find rhyme and reason to it all on what we call MyStockScanner Live, powered by the 3-Point Playbook. Hans-Henrik Nielsen and Liam Flavell are ready to give you answers. I'm Jesper Behrens. I'm ready to ask questions. Some of them could be yours if you send us an email at fomo@mystockscanner.com. But let me ask you two, Hans-Henrik and Liam, does it feel like we're in that storm that's hitting the Caribbean right now? Because it seems like it's hitting Wall Street as well, even though that we are talking metaphorical here. It is a stormy week we're in, isn't it?
Oh, definitely. There is a lot going on, and there is even less going on than normally because we don't get all the important numbers that we normally do from US. We have the earnings and interest rates and trade war, all the usual stuff.
All the usual stuff, and that says a bit, and it is a bit crazy. But we do get the Fed rate decision, and as said, that's going to be later today, and earnings season is in full force. The 3-Point Playbook, well, we put the stocks that are coming with earnings through all the same questions as always. Is it a quality stock? Does it have an upside? And is now the right time to buy? So just be sure we will do that every time, and we'll give you the best possible analysis. And on the show today, we will be talking NVIDIA, of course, but also Nokia. We will be talking Uber, KONGSBERG, Equinor, JYSKE Bank ALM BRAND, Dorman, Prismarian, and probably Trump, Xi, and Powell. That sounds like about 111 billion things. And, well, that's today's number, but it's just in dollars. $111 billion. That's the kind of money that's always nice to have in handy. If you need them, we'll tell you the story behind that. But right now, let's dig into things. Liam, we're going to talk about NVIDIA. They made about, I'm going to say 111 billion deals yesterday, didn't they? What were they up to at the GTC? It was a major thing.
Yeah, I had to check this morning on our company website. They hadn't bought part of us because they just seem to bought part of everyone at the moment, don't they? There's a big event in Washington at the moment where NVIDIA have announced 20 to 30 partnerships, probably a bit more than that, to be honest, covering everything from robots to new factories to tie-ups with commercial operators like Microsoft and things like that, and deeper tie-ups with them, to cars, to you name it, they're into it now. If we look at, I'll just share my screen very quickly, and we'll look at NVIDIA. Most people have probably heard of them, I guess, by now, so we don't have to really tell people what they do. Though actually, with the current deals, I think people would probably be surprised what they actually are getting into, but we'll go into that in a sec. But if we look at it from a playbook point of view, as people probably know, we got our 3-Point Playbook, which is that gives us the rules of how we invest, and it allows us to constantly sort of have a framework where we say, okay, we've got an investing plan. Stick to it, and we should make money. The first question on the 3-Point Playbook is NVIDIA a quality company? I'm not even going to go through many of these. It's got a 100 quality score. It's the best quality you can get out there. The earnings are going through the roof. The returns on equity, the returns on capital, so how the company is efficiently using the money that has been put into it are awesome. The only bit in red here.
Lose Liam there.
Oh no, I'm still here. No,
yeah,
okay, yeah, no. The only bit of red here that I could possibly mark it down on its homework is the price to free cash flow, which is quite high, which isn't a surprise on a stock like this. If we move on, the second question is there upside in the stock? So, is the stock cheap? You can definitely say this stock is not cheap, but you can say there's upside on what we know. At a price to earnings of just 50. Then we're looking at a potential of just in the next couple of months an upside of 9%, and potentially over next year 70%, something like that.
Can I just ask you a question here, Liam? Because the thing is that you mentioned 50 is cheap. That's kind of saying that brown is the new black, basically, because it's just what we are getting used to in price, right?
It is, and normally with most companies, if you look at it, depends on the industry or the sector you're looking at. With car companies, you'd say 4 is cheap. and 6 to 8 is getting a bit racy because that's what people have typically wanted to pay for these sort of stocks. When you're looking at tech stocks, they tend to be on the higher side for the price to earnings ratio, just because people will take on more risk as they expect higher growth from tech companies. When you're looking at the best of the best tech companies out there, then I don't think 50 is a ridiculous number to pay, especially when you look at a company like Tesla, which has got a PE of 300 or so. Palantir was up at 650. I don't know what it is now, but it's probably not too far south of that. But what you're buying is a company that is starting to make its way into the structure and fabric of our day-to-day lives. So the deals it's doing, we'll talk about Nokia and comms in a sec, but the deals it's doing with the telecoms communication companies out there in America and with Nokia in Europe basically puts it at the center of mobile communications and infrastructure for the next 10 years. The stuff it's doing with cars puts its center in absolutely essential for driverless cars, which everyone is pushing for at the moment, and so on and so forth. So the deals that they produce now mean that they are a company that we would just buy Nokia and just forget about it and come back in 10 years and see how much money we've made.
And we will get back to more NVIDIA later in the show, because, as you said, the thing that they did at the GTC event in Washington yesterday was mind-boggling. A lot of companies involved in deal-making with them. One of them was found here in Scandinavia, and it wasn't us, as you mentioned. I definitely can't see it on my bank account, but it was a Finnish stock, Nokia. And I'm almost going to say, Hans-Henrik, have you kept your 3210? Was that?
Yeah. I couldn't find it in the drawer, but I have the phone. So there's probably a bit of power left on the battery still after 20 years. But just looking at it quickly, because we've gotten a lot of questions about the Nokia. I won't go too much in depth with it. It's a reasonable quality company. However, looking at the value chart, which is just what I'll do quickly now, is that as you know, if you followed us, we like the stocks to be down in the lower end of what we call the PE band. We're using PE and earnings per share to multiply to see if it's cheap. Nokia seems quite expensive right now, and we can see there's not a lot of potential. However, they're trading at a PE at, sorry, I'm scrolling a bit, at 35 right now. And if that can be sustained, 35 in PE, and I actually think it can, now that they are doing deals with with NVIDIA, then there is quite a good upside into it. So we are keeping an eye on it.
But again, it's a stock that also was trading on the Finnish stock exchange yesterday. It was up by 17.8%. Yes. But then I looked to NASDAQ, and it was up by 22.8%. Did the Finnish people get cheated, or what happened there?
No, there's a bit of difference. There's time difference, so one can catch up to the other. We get a lot of questions about where should we buy the stock, and normally we recommend buying it at their home turf, at the original. If people want to do that in the Finnish stock exchange, it is in euros, so there's not any currency complications there.
But again, what you conclude from looking into a 3-point playbook, and that, of course, is our conclusion. We always stress that people should take a look themselves and sort of move around with the different lines if they feel comfortable with it. But your conclusion is this is definitely not a stock that we will be looking into at the current situation.
I wouldn't say that, because there could be some potential upwards. We do like to see a little consolidation. We don't buy on these 15-20% pops. So we do like to see a bit of normalcy coming in, and then we can buy it on a retracement if we find it okay.
Another thing that we know for sure is happening, and that is tonight, the Feds are going to take a decision. It's going to happen at about 7 o'clock. The decision will come 7:30. We will have the press conference where Powell will step up to the mic and tell why they took the decision that they took. But you guys, what are we looking at here? It seems like the market has decided it's going to be a lowering of the rate. Is it 0.25? Is it 0.5? What are we looking at here?
Yeah, it is tonight. We're going to have a look at what Powell says. First of all, they're going to decide on 0.25. And it can sound a bit dry and nerdy and everything, but it has a lot. Yeah, it has a lot to say about First of all, what interest rate we are paying on our mortgages, but also the companies in the US are, a lot of them, heavily leveraged, meaning they have borrowed a ton of capital to grow with. So high interest rates is really hurting them. That is why Trump have said he wants the interest rate down. That is to spur some growth in the economy. So when they're lowering their interest rates, we often see stocks go up. The problem right now is that inflation is also going up, and then it gets even nerdier because lower interest rates, higher activity in the economy, that makes people spend more, and then prices go up, and we have some problems. But it will be interesting to see tonight.
And I got a little bit ahead of ourselves there, because we are going to talk NVIDIA again just for a little bit, because apart from what we're doing, keeping an eye on, of course, then Xi and Trump are going to meet tomorrow. And one of the stories that is that Trump will allow China to buy the Blackwell chip, which they haven't been allowed to for now. I put on a sign that said $5 trillion at the valuation of NVIDIA. Liam, is that going to be the price for NVIDIA if they are allowed to export the chips to China?
It could be. It's a difficult one because Xi has turned around and expressly directed companies in China to use homegrown chips because they want to develop their own chip manufacturing processes here. So I think they will take them, because the thing that the Chinese chips don't do particularly well at the moment is train their AIs. Their existing chips from Hawaii and people like that are very good at answering questions on the ChatGPT type LLMs that are out there, but they're not particularly great at training, so they've had to revert back to them. So I think if Xi was really going to push it, he would go and say, "Let me have the latest machines from ASML, which actually create chips," and that's what they're missing. That's a missing piece of the puzzle for China.
And it's not to play big politics here, but as the last time I checked, I think that Holland is outside the US, and ain't they the company that ain't that the country that has ASML?
They are, but at the end of the day, it's the US that are putting the embargo on selling this equipment over to China. The EU are going along with it, but if the US turned around and said, "Yes, we're prepared to do this," then I think it will probably happen.
And then let's look even further into NVIDIA, because yesterday, as we said, a slew of deals were done. It was basically everybody and their dog that got a little bit of NVIDIA. One of the big ones that we noted right away, and to be honest, I thought that it was going to give them a huge bump, Hans-Henrik, that was Uber, because we're talking about that the Uber fleet could, and we're talking 100,000 robo-taxis that's going to carry the NVIDIA chips. I thought Uber's going to shoot to the moon or Mars, but maybe that's a different car company though.
Yeah, now you're mentioning Mars. It was actually interesting. I was looking for something about Tesla in there, but they were not mentioned at all. The big invisible elephant. And we just sold Uber actually a while back. So when I heard this Uber mention, I thought, oh no, it's going to the moon or whatever it goes. But it didn't, as you say. The reason why we bought Uber, it is a good quality company, revenue is growing, and so on. If we look at the valuation, they have I've been moving these a bit around, and it's always a good question, where should we put them? But they were getting kind of expensive. We were buying them when they were cheap, or cheaper at least, and then we sold. I can't even recall what day. I think it was the day it broke down here. We have our very strict rules of when to exit a stock. It was in red in our MTIs down here. But yesterday it popped up at first, and then it sold out. Uber has basically moved sideways for quite a while now, so I wouldn't rule out that we could buy it again at some point. But it doesn't seem like the NVIDIA deal was the big thing for Uber. We already knew it a bit. Uber and NVIDIA had been coupled together in several news stories lately. So maybe that is why it was already priced in, I guess.
One of the things that we also do on this show is that, of course, we ask our users of our can you say, the tool that you guys have created. But we also asked them in the different groups on social media in regards to what stocks they're interested in when it comes to different countries. One of the stocks that we have been looking into, or one of the things that we do on Tuesdays, is having a poll, and we asked them about Norwegian stocks. 2 stocks were the clear favorites. Equinor came in second, and on top it was KONGSBERG. Again, not a surprise. The defense stock, huge thing, and a huge important thing for a lot of people in their portfolio. We are not in KONGSBERG. Why are we not?
That's because it's been falling recently. So, yeah, it's not something that's particularly interesting for us. If we do look on the playbook, then we can see, 96 out of 100 is a very high quality stock. The earnings are shooting up, just like every defense stock out there. For the future, the golden columns there are the future values that are expected by the analysts. The PEG ratio, which is a measure of just how much is priced into the current price of the stock, is very low, which is what we like. Returns are going through the roof. There's no real debt problems or anything like that. So it's a great stock. If we look at the value chart very quickly, we can see that actually it's been going down. We sold most of our defense stocks about 2 months ago, something like that, 2.5 months, and people were questioning us then, saying, but it's always going to go up, isn't it? They don't. Stocks go up, people take profits, it goes down again, and we're in that at the moment. There's earnings tomorrow, I believe, or Friday. I think it's tomorrow, and we shall see. It'll be interesting to see. Sometimes you see, obviously there's absolutely no insider trading going on or anything like that, but you often see sort of these stocks where these things go down, and then all of a sudden there's the earnings reports aren't quite as good. But we don't trade on earnings. So if KONGSBERG come out with good numbers and they start shooting up, we might jump onto them and carry on from there. From a technical point of view, just very quickly on the trading view side, then we need to see a bounce, and we need to see that stock go above the 200, the black line, and the green 50-day moving average, and maybe go up a bit, bounce off those lines again, and then we'd be happy that we go into it. And the MTIs are still red as well at the bottom, so we'd actually look for all of our technical indicators to be in the green for us to go into it.
And I know it's very tempting showing off the Indra Sistema, the Spanish stock that we have, because that is really tearing up right now and showing huge plus, basically 6-7 days in a row. Hans-Henrik, just quickly, what's going on with Indra?
Well, it's also in the defense industry. The difference here is basically where we bought it. We bought it first down here, sold it up here, and then we bought it again here. And the theme here is, we buy quality stocks, but we only want them when they're cheap. Whereas with KONGSBERG, if we just look at the value chart here, they have not really been cheap in our book. So that's why we haven't been into it. Indra, we first made a small fortune here, and now we're making a fortune more in it. It has been good to us.
We're going to talk about the 3-point playbook portfolio on Mondays. That's what we do on Mondays, but we can tell we have a little article about the Norwegian stocks that we mentioned here today, KONGSBERG, of course. And later today, we already published an article about the Danish stocks, because the thing is that we had earnings from JYSKE Brand, and we had earnings from JYSKE Bank as well. And we have an article on that online. But if we should talk about it just really quickly, Hans-Henrik and Liam, both of them earnings beats, but it didn't really pop on the exchange.
If we look at JYSKE Bank here, let's see if we can find it in the live here. Here we go. It does pop a bit. They were good numbers that they came out with today. However, we knew a lot of the numbers. They disclosed them back here, so that was a pop we saw here. So this today is actually very, very decent. Looking at JYSKE Brand here, they went up massively in the morning here, big pop up. And then investors have been selling off. So they are, we often remind people and say, even though you think the numbers are good, then wait and see what the market does. Because the big guys in the market have their own way, and we should always follow them.
And if we stick to what we're talking about here, then I know the rule is never buy into earnings. We had a stock of the day a couple of days ago, Dorman, that we didn't buy into earnings for that reason. There's been a question or two about it on our social medias, but also at FOMO@MyStockScanner.com. That's our email. It went into a minus of 12%. It traded back up to, if you can say back up, it was still minus 9.8 at the end of the day. We were super close to buying it, but didn't, and it fell. You guys, this is the particular reason why we don't buy into earnings.
It is because we just want to stay away from that volatility. We just have no idea whether a company is going to say, even something in this market like, okay, we didn't quite book in enough sales, but all the sales are coming next quarter. Don't worry, you're still going to get your money back as an investor. People will still sell off on that because they're expecting numbers at a particular time. So in this case, you can see a big downturn because investors didn't get the information out of the company at the earnings release that they wanted. So we tend to stay away from them and say either a couple of weeks before minimum. We need a 2-week period at least before earnings to buy into it. So we get some sort of cushion if the price is going to drift upwards by 2 or 3%. So at least if it drops, we're not too badly off, or just after earnings if they're great.
One thing for sure is that we try to give the information that we have available to our users at all time. Of course, we are relying on the data that we get, and we didn't get the data needed for telling when the earning was on this one. That's simply because of our suppliers, not because we don't want to tell. Yeah. But it also stresses that when you buy a stock, be sure, go check the stock on its own webpage. It'll always tell when they have earnings there. But it's one of the due diligence things that you guys always do. Look around, find that day. It's not because it doesn't exist.
Yeah, it's something that we haven't stressed too much actually, but we do need to sort of bring that into our training and those sort of areas. We get it's garbage in, garbage out is what we call in IT terms. If we don't get the data, then it just goes out blank. When I looked around last night, Jacob reported it last night on our forum. I looked around, Seeking Alpha, for instance, had the earnings as yesterday, and we see these again and again on TradingView, and all the platforms have this issue. So it's not just us; it's across the board.
Now we talked about not buying stocks going into earning. There is a Prysmian that we have in our portfolio. It has earnings tomorrow. Do we have a rule? Do you guys have a rule about the stocks that you have that comes into earning? Is there a difference from not buying the stock that's coming into earning and then holding a stock that's coming into earning? Any rules about stop losses? Anything?
Yeah, well, Prysmian here, an Italian stock. We bought it down here when it broke up, and has been a fantastic stock. Has really earned us well this year. And this is a good point about sticking to our winners. When they just keep going up, well, we just follow them. Normally, we have a stop loss around the green line here. That is the average price of the last 50 bars, the 50-day moving average. When it is this high, we sometimes have other rules. We describe all of that we have a free course on our website where we talk all about it. So we might tighten up our stop losses a bit. However, we don't mind holding a stock over earnings. Yes, it might shoot down. We saw that with Dorman, 10-15%, but it just might as well go up. I personally don't get put in an automated stop loss. I'm monitoring my stock, and that is because we often see that the stock, when the earnings hit, there's some misinterpretation of the numbers. It drops down, and then it pops up again the same day. And then you get stopped out, and everyone else can collect your stocks for free almost, or at least cheaper. So I like just watching it when the data comes in.
I would say that when you said the stock was free, I was going to ask what exchange that you're dealing on. I want to go to that exchange to do
Novo, isn't it?
Yeah, exactly. Yeah. Well, don't bring that up. That's
Sorry.
a whole different can of worms there. Yeah, I know. But the thing is, and as probably you who's watching right now can feel and sense, there's so many things going on. We are going to run over just a tiny bit today because there's so many things to talk about. But also, we will do an extra show tomorrow simply because there's so many earnings coming in of the big players that we will want to take a look at their numbers tomorrow. They come after closure tonight. It's going to start, and then again tomorrow it's all over again. So we're going to be there Thursday and Friday. But Hans-Henrik, you're also going to be there for Powell's decision in regards to what the Feds are going to do. You're going to comment that live.
Powell and me, we're like this.
You're like friends.
We'll spend the night together tonight, 7:00. I'll comment in on our platform on Facebook, just saying, what is he saying? That's the important thing. We need to hear what he indicates about the future.
You're going to spend the night together.
Yes, I know that sounds a lot more kinky than it is, but
who knew that Powell is in Viborg? But okay, fine, fine with me. But anyway, just a question, because we had one at FOMO at MyStockScanner.com asking, but why is it important for us what the Feds do?
Oh, that is extremely important. I know we're talking about one rate cut, two rate cuts, and so on, and 0.25%. It sounds like almost nothing, but we should remember that markets are looking at this. A lot of the companies in the US are very dependent on the interest rate. So when the interest rates go down, they can take on some more debt, or they don't have as many interest costs. So it is something that really, really moves the market. And it is really important. Also, just for our normal mortgages on our own home, they are also dictated by this. So really nerdy, but also really important.
Okay, Liam, I'm gonna give you the fun question of the show today. If you had $111 billion in cash, would you buy NVIDIA for all of them?
No, diversification is the key.
Diversification.
Most of them.
Yeah, it is number of the day, and the company that has that kind of cash laying around, that's Toyota. They have the most cash of any company if you look outside the banks. I can tell you Google and Microsoft are tied in second and third place with $95 billion. Probably going to add to that when they bring out the new numbers. We're guessing that. Amazon has 93, and TSM is closing out top 5 with 90 million. So far, the show today. We're going to be back tomorrow, extra show at noon tomorrow. At noon, as said, to look at the numbers that we are coming in, and we're going to be there at Friday as well. Remember, emails for us, FOMO at MyStockScanner.com. And when you go to market, well, do your due diligence. Look at the numbers. Make sure it's not into earnings if that's what you're looking for. And just, again, we are trying to help you sleep more calm at night and take the right decision. So look us up on our platform and ask us questions and check us out. We will be back tomorrow at 12 o'clock. See you guys then. Cheers, mates.